Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Tuesday, April the 20th. Welcome, welcome. It's so good to have you here. If you're here this morning, I would love it if you would drop your name in the chat, say hi. What I'm trying to build here is a community of traders, and I've been trading for 20 years. This is what I do for a living. So we're going to take some trades together this morning. These are for educational purposes. So if you choose to follow, this is going to be at your own risk. I'm just going to take them in front of you. I'm going to talk through them, help you understand how I'm taking trades. If you choose to follow me, that's at your own risk. This is educational purposes only, but we're also here to build community. So if you're here, I would love it if you'd say hi and ask me any questions you might have. Drop any comments in the chat. I am happy to answer those. So let's talk a little bit about what is going on this morning. Right now, we have a bit of a downturn in the market for the first time in days and days. We have a little bit of a downward momentum. So we're going to have to look at our daily chart here and see what that means for us. Looks like Val is here. Good morning, Val. Gavilan is here. Hi, Gavilan. Thanks, guys, for saying hi. I appreciate you. So yeah, first things first. Let's take a look at our daily chart and see what this downturn is meaning for us. It could just be temporary. It doesn't have to be the beginning of the end, although it could be the beginning of a significant move downward. We have a lot of big ticket items coming up, right? We've got FOMC coming up tomorrow. That is the Federal Open Market Committee meeting. This is where they discuss rates and our future for the rates, cuts or hikes. It is a pretty much foregone conclusion that we are not going to get any rate cuts. We're not going to get any rate hikes. We're going to be we're going to sit the same. There's going to be no change, no movement in the rates. That is what most of the market is believing. But usually the FOMC meeting serves more than just to find out if we're going to get a rate change. It also serves to find out what the board is thinking, what the chair is thinking. Now, this will be Chair Powell's last meeting as the federal chair, the Federal Open Market Committee chair. This will be his last meeting. His term is up, and Kevin Warsh has been nominated to take over. So far, I don't believe he's been completely cleared, but I believe that's in the works and coming soon. All that to say that this meeting still has implications. It's still important, but it's going to be maybe what Powell has to say might be a little less important than usual because, of course, he's not going to be here anymore. So we'll see what kind of fireworks we get in the market. We also have major earnings coming up, major earnings coming up tomorrow after the bell. So after the market close, we're going to get Google Class A, Class C. We're going to get Amazon. Let me double check. Meta. Where is there we go. Amazon, Microsoft, Meta, Google Class A, Class C, and QCOM are all going to report tomorrow after the bell, and then we'll get Apple on Thursday after the bell. So we're definitely going to get some big movement, lots of movers and shakers in that mix there. So we're going to be watching for increased volatility tomorrow and Thursday. We'll see the results after the close. So we'll see the result of the earnings after the close, but you can see how the stock moves. So if you're interested, be watching Google, be watching Meta, Microsoft, watch how they behave after the close. You can see them. And we'll know, at least we'll get an idea how the market might respond. All right, David 2C, good morning, welcome. All right, so we are in this little downward movement here. We're down about 52 points from yesterday's close. So remember that when I talk about these numbers, right, how far we are from yesterday's close, That is also how we calculate gaps. So when we are talking about a daily gap, we're looking at the difference between yesterday's close and today's open. That tells us what the gap is. And we did have a gap today. We gapped down about 30 plus points. We've dropped since then. So let's get over here to our daily chart and let's see what that candle is looking like on the daily. Good morning, Nick. Good to see you. All right. Here's our daily. I'm going to put the SPX on here. Aha, looking a little roundy top here, maybe. We don't know for sure, right? Could we just spring off of here and just keep running upward? Yes, we absolutely could, especially if we do get some kind of fantastic earnings. Everything, is beautiful and everybody's happy and the earnings are gorgeous. We could certainly see another leg up. That is not out of that's not out of the realm of possibility. So that is a possibility. Right now, if we take a look at this candle that we're creating today, it's not too impressive one way or the other. It is a drop down. So you can see the gap, right? Here's the close of yesterday. That was Monday. Let me zoom in a little more, make this chart a little bigger for you. Okay. So yesterday we hit yet another all-time high, right? Here's our all-time high, 71.78 on the SPX. And after a couple of days of sideways movement, right? So we started to see a bit of exhaustion, I would say. The rally is starting to look a little bit exhausted here, isn't it? And then we got 2 more climbing days, but they weren't huge. New all-time high. And then today we get the gap down. So here's the close from yesterday, and here's the open from today. Remember, red candles open from the top and move down because they're red, they're moving down. Green candles open from the bottom and move up. So a green candle closes at the top, a red candle closes at the bottom. The green candle closed yesterday at the top right here, 71.75. And then we opened today at the top of the red candle at 71.34. That was our gap. So the gap filled with this wick, right? Almost. We didn't quite get up to the open, but we got up to the close. And the gap almost filled with this wick, but it didn't come anywhere close to filling with the body. And for me, a gap has to fill with the body of the candle. We can sort of say it closes with the wick, but that's not the way I do it. And we've also got a gap here that's in the process of getting filled. Do you see it? Here's the gap right here. So we have a close from, this is the 23rd. So what was that? Was that Friday? 27, 26, 25, 24. I think it's Thursday. Yeah, Thursday. So here is the close on Thursday right here, 71.06, and then a gap up on Friday to the open right here at 71.35. That's a gap. That gap is in the process of being filled. This wick did come down and fill that gap. The body hasn't quite filled it yet, but it might. If we continue on downward, it might fill. So gaps act as like a magnet for price. If we are moving in a certain direction and there is a gap nearby, it acts as a magnet. You will a lot of times see that gap get filled. If price is anywhere near it, a lot of times you'll see that gap get filled. So that could happen today. The other thing that could happen is we also have an overnight high way up, much higher than where we've been so far. Much, much higher overnight high than I would have expected. And I'll show you where that is. Let's go over to the futures chart. I'll show you where the overnight high is. Right here, right there. Sitting at 72.23, where the current price of the futures is sitting at 71.60. So that is 60 points overhead. So we still have 60-point gap, not gap, 60-point high that could get filled today. So these overnight highs and lows, I mark them on my chart because they're important. You have to pay attention to them. Will it fill today? Not necessarily. It's a lot. It's a big ask. It's a big move up. It could, but it will fill. We just don't know when. So we will tag this number at some point. We just don't know when. So one voice. Good morning, Jen. Good to see you. All right. So now that's kind of where we've been and where we're going. We hit the overnight low right there a while ago. We hit this overnight low right in here. And we since bounced. You can see it also on the SPY. Let me put this back where it was. And here's the SPY. So you can see we hit this overnight low. We dipped just a tad below it. And then what did we do? Boom, we bounced. So now we're on our way. Looks like possibly up to the VWAP. It's possible that we head on up there. I'm watching this rise here. I'm not trading the call right now. We are below the VWAP. We have hit the overnight low. We're a little bit negative here. So I'm not trading the call just yet. If we roll over here and our MACD starts going red, we could consider puts again. Third test of the opening range. Yep, this is the opening range right here, Nick. You're exactly right. This is the low end of the opening range. So that little green line right there tells you the bottom of the opening range. For me, I block off the first 15 minutes. So you're exactly right, Nick. It's trying to test it. It broke down through it over here, tested it here, currently testing it right now. Suresh, good morning. Good to see you. All right. So currently we are in this downward move and kind of sideways. We have not been able to break down below the overnight low. And as Nick pointed out, we haven't been able to break into the opening range yet. So right now we're in a little bit of a sideways range. So no calls for me here. If we break up through the VWAP, I might consider it. And no puts for me either because this overnight low has already been tested. So I want to see a break of the overnight low or a break into the range and the VWAP. That's what I'm looking for. Right now, no trade at the moment. All right. Moving back into range. And we'll go look at some of the Mag 7 charts here in a minute because I'm curious to see kind of what they're looking like before earnings. Microsoft and Meta both announced major layoffs. Actually, Meta announced 8,000 layoffs. Microsoft announced roughly about the same in buyouts. They're trying to buy out employees' contracts. Virtually winds up being the same thing. It's a layoff. So that's really interesting to me that these layoffs are coming right in front of earnings. So we'll see what all of that means and how they do. Earnings are going to be super important this quarter because these mega titans have been running the show. They have been running the stock market. They've been running the NASDAQ and the S&P 500. And so they have been every quarter just pumping out these insane earnings and just continuing to post these, huge profits. And the thing is, the amount of capital expenditure that these companies are committing is billions and billions of dollars. So at some point, at some point, these earnings are going to start to change. They just can't continue on these. It just can't continue like this. So at some point, they will change. When is that going to be? Well, we don't really know, right? That's why we're watching. But this season is going to be very important. So I'm keeping a close eye on that. And investors will be listening to the guidance. So there's usually two parts of any earnings report. So the actual report itself, which talks about the company's earnings, their profits, all of that. And then there's the earnings call, and that's where the CEO, the CFO, somebody up high on the ladder gets on the call and talks to investors about what they are seeing for the future. They call that guidance. So they're looking to the future. They're casting a vision, and some of these guys are absolute magicians at that, right? Elon Musk is one. Jensen Huang is another. Tim Cook was great. He actually just stepped down, but these guys get on there and they cast this vision. And so if the investors like it, then the stock climbs. And if the investors don't, then the stock drops. And at this point, the capital expenditure, I think, is going to be what a lot of investors are looking at. So we will see what kind of response we get. And that's going to be huge for determining the rest of the moves for the markets over the next several weeks, how we perform at earnings. So that's a big deal, guys. Keep your eyes peeled. We'll be watching that. All right. Composite reported 0.9 versus 1.2. What does this metric mean? The composite 20 HPI. I have not looked at that metric, Jen, but let's see. Let me take a quick look here. It's a home metric, Jen. It's the house price index, measuring the change in the selling price of single family homes. Higher than expected is taken as positive for the USD. So it's actually, it looks like home prices are coming down a bit. So we had a previous of 1.2%, looking at 0.9%. So yeah, it's the metric for looking at the selling price of single family homes. So great question. I myself was not aware of that metric. So thanks for asking. All right. Still sitting in this range here. No trade for me inside this box. You can see the box, right? Green line here, yellow line here. That's the box that we're in. And it just so happens that I had my lines already drawn there. It's no mistake, right? The market respects these levels. It respects these overnight lows and highs. A lot of times it will respect this opening range. So not a surprise that we're kind of stuck in a range here, but that's okay. We've had a great morning so far. We've taken a couple of puts today. I took some earlier and did great on those. So now just waiting patiently for another opportunity to trade. In the meantime, I've been watching oil slowly climb. Sweet crude futures are at 99, almost $100. That's kind of not a good level there. As oil continues to climb, the market will probably continue to drop or get shaky. The market sort of decoupled from this whole connection a couple of weeks ago as we started to make this meteoric climb. At first, when the Iran conflict occurred, the price of oil, of course, spiked, and the market really, really didn't like that because oil runs everything. The price of oil mandates global economics everywhere across the globe, right? Because oil runs everything. So as oil climbed, the market did not like that. But then somewhere along the lines, that got decoupled, and the market said, well, we don't care. We're okay. And so now oil has continued to be elevated, remain elevated, and the market has said, we don't really care. But the market will care because this is going to really start to show up soon in the supply chain. It's going to show up in the food prices. It's already showing up in the gas prices. It's going to start showing up in consumer products. And so the market can't close its eyes forever. So I think we are coming up to a short-term top. Now, I'm not calling a top, but I think we're getting close. And again, earnings are going to have a lot to do with what we do over the next few weeks. So oil continuing to climb, not a good thing. That's not a good thing for the economy, not a good thing for inflation. And I do watch that every day. Since the Iran conflict, I've been watching oil every day. And looking at the rest of the leaderboard here, we've got Apple up today at 1.3%. Microsoft at 0.2. The Dow is up a little bit, just barely over its flat line at 0.06. Google just flat at 0.07 negative. Amazon 0.7 negative. Everybody else kind of in the dumps today. The Mag 7 ETF is 0.7% negative. Tesla down 1%. IWM is down 1.2%, so good bit below us. The Qs are down 1.4%. Interesting. Meta down 1.6. NVIDIA down 3.5. Nope, that's MSTR. Hold on. 3.6 on NVIDIA. Yikes. Okay. So yeah, more red than green for sure across the board. All right. Nick is saying that the UAE left OPEC. Yes, I saw that, Nick. That was an interesting development. And I need to read up a little bit more on that to find out really what the repercussions of that are. But that's a big deal, I think. All right. I'm going to take a look at the chart on the NASDAQ because that's telling me that we could have more to drop here. Okay, similar chart on the Qs, looking very similar. So Q's looking, like I said, very similar, kind of holding a bottom here, at least for now. We're holding a bottom. Let's see if we come down and break through. If we break through, we might consider some more puts. I'm going to take a look at NVIDIA as well, because that's a big drop on NVIDIA since this morning. NVIDIA was giving us a climb and then whoosh, just dropped pretty hard. So NVIDIA down 3.5%. And NVIDIA, I've always looked at NVIDIA as one of the leaders in the tech space. It's sort of abdicated its throne there for a few weeks and months, but I think it's reconnecting here. So I always look at NVIDIA as one of the leaders in that tech space. And you can see that chart looks also very similar. The NVIDIA chart to the S&P 500 is looking very similar. All right, I think we've got more to go today. That's what these charts are telling me. more to the downside, I think. We have not been able to break into back inside the opening range. We've not even come close to testing the VWAP. We came a little bit close here and then rejected before we even touched it. So not looking super strong here. So if we come back down through this low, this is the overnight low, we pierced it here and here and then bounced off of it. If we come back down through that, we could take puts here. But again, it's just giving us the sideways run around right now. We'll take a look at volume here in just a second. Volume on the options chain. We'll also look at volume on the daily chart. That's been a little bit telling as well. The daily chart has had really descending volume. It's really been coming down as we sort of started maybe building a top. I'll show you the volume chart here. Let's look at, we'll look at SPY. All right, so I've got volume two places. I have these blue bars here are volume, and this is a daily chart. So this is the volume showing every single day. Down here, this is a volume average, and this yellow line represents the average volume over the last 50 days. All right, I'm going to load some puts here, the 710 puts. We are coming up to our low. If we break down through it, I might take a put here, but I've got to be convinced because we broke through it and we bounced. So now we want to see if they're going to hold it again or if we're coming down lower. All right, I'm going to keep my eye on this. I've got, like I said, I've got puts here at 710. I'm not in them. I'm just looking at them. I'm waiting to see if we break down through here. In the meantime, check out this volume here. So you can see up here, we've got this. I've got to take off the volume profile. You just can't see anything with that volume profile there. All right. So over the last few days, we've been notice this volume. See how it's, if you drew a line, you could see how far it's descended from the 31st. What happened on the 31st? We had, there's a bounce right here. The 31st was basically the beginning of this V-shaped recovery, right? So see this volume bar on the 31st? Big volume here. And then what did it do? It just relentlessly climbed. Now, over the last few days, we can start to see this volume is descending. Look at the volume for today. Look at the volume for yesterday. Absolutely nothing. Very, very low, well below average. So again, this is the average bar. That represents 50 days of volume, this yellow line right here. We are well below the average. So a lot of people will make a big fuss about volume, and I watch it, but honest truth is volume doesn't really matter at the end of the day, because if the market's going to move, it's going to move, whether we've got volume or not. But it is an indicator of a declining sentiment, right? We can see there's just, like I said yesterday, who is buying at these levels? Well, not too many people, right? Because look at how little the volume is. So that is something to be aware of. We're making a round over, at least right now. That doesn't mean we can't bounce again here, but as of right now, we're kind of just flat, kind of moving sideways and rounding over a little bit here. So something to bear in mind, especially before big earnings tomorrow. All right, well, that was a little fake out there, wasn't it? Good thing we didn't jump in, because we got stopped right here, right on the line. And again, guys, I say this probably every day, but this is why these lines are so important. These overnight lows and highs, yesterday's highs and lows, they get hit almost every day. You can count on it. So they always come in pretty handy for me. All right, let me get back to my minute chart. Looking for another test right here. I'm still holding puts, not in them. When I say holding, I mean to say I'm looking to place an order. I'm just ready to trade them. I'm not in them yet. Okay. Let's see what we do with this next test. I think we're going to break, honestly. I don't mean right this minute, but I think we could break this bottom here. With Qs being down the way they are, with mags being down, I think it's possible we break this bottom. So let's see. Let's see what we get. Another little test here. This is a little bit extended for me. I don't like getting into a move that's been going on for a while, but I'm not going to take a move in the middle of the range either. So now I've got to make a decision. If we break down here, have we been going too far to have any more legs left in this move? We don't know that yet. All right. Not only that, volume tells you when we may have a trap. If the market goes up with low volume and goes down with high volume, you can use that information for a further downturn. You can, if the market is going up on high volume or even going down on high volume, that's more conviction. If a market is moving in a certain direction up or down on low volume, that's where it can be a little bit trappy. That's where you can maybe expect some turns to be on the way. So great point, David. Thank you. All right, looks like another bounce here. $71.20 is where the SPX is parked. Do you guys remember where I put our resistance line? I put it right on 71.20. Look, do you see it? That line I drew, I think we drew it together on this stream a few days ago, and it's really been respected. Let's take a look at the daily and you'll see again what I'm talking about. This line, I drew it just a few days ago, and look how well respected it's been. We're sitting right on it today. We respected it on Friday. We've hovered right around it. So this has become an area of importance, a magnet, basically. It's a magnet. So 71.20 is roughly where we were at a resistance, and now looks like a bit of support on today's candle, doesn't it? Let's see if we can break down below that. I have a feeling that we will. A feeling that we're going to break down below that. We don't have to, right? We could just go sideways today because the market could just wait, for FOMC tomorrow, could just wait for all of the earnings. It doesn't have to go anywhere. Right now, we're making just a little doji. We haven't dropped too far. We haven't climbed too hard. We're just holding basically sideways. And maybe we do that for the rest of the day. That could happen. And so if we just hold sideways, then we've got to be careful with our trading. That's why I'm really cautious when we're in a range. Again, here's our range. Been going on since about 10:35 Eastern, almost an hour now, with this up and down inside the range movement here. So I'm not trading that until we get a break one way or the other. David's saying, came from my investor business daily. Well, thanks for sharing. I appreciate that. All right, huge jump. It looks like a huge jump when we're focused on the micro, but it hasn't really jumped too far. Let's see if we can start to get it to push up here. That could happen. If we get that, we might consider a call because we're at the low end of this range. I don't know. I'd rather wait for the range to break. And it will eventually. They almost always do. It's really rare that we sit in a small range all day long. It does happen, but it's very rare. And what is our VIX doing? Let's talk about the VIX. I think we've got a spring loading on the VIX. I think it's getting ready to spring. And whether, now usually when the VIX springs, the market comes down. But when we get an elevated VIX, we're getting an elevation in volatility. We're getting an elevation of fear in the market. Now, sometimes with an elevated VIX, you can see a big spike to the upside with an elevated VIX. And sometimes, more often, you see the spike to the downside. But the idea is that when volatility rises, you start to see wider movements, more bold spikes type of movements up and down. And I think the VIX is coiling up to give us a spike, which means more than likely we'll see a big move down. But it could be that we do see a spike up. One way or the other, I think we're going to get a big move. All right, talk about if the earnings come out amazing tomorrow, is it reason enough to buy or is it sell the news after the huge run up? It's a great point, David. It's a very great point. It could be sell the news. And I think, like I said, a lot of it is going to be less about the earnings and more about the guidance and the capital expenditures that these big companies have planned. I think the investors are getting a little bit more wary of these large capital expenditures. Obviously, you know, AI, you've got to put some capital in it. You've got to invest in it, right? And that's what they're doing. But these expenditures they're absolutely enormous in the billions of dollars. So how long are the investors going to feel comfortable with that? I don't know. That's the question. All right, getting a bounce here. We might consider calls, maybe, at the 710 level. I'm not sure. Like I said, I don't really feel good about trading inside the range. We do have enough room. If it came up here to test this opening range again, we do have enough room to make money. But the risk to reward is a little bit too great inside of a range. All right, even if CapEx goes down, I'm saying even if all news is perfect, aren't we priced into perfection right now? It's a good point, David. How much higher can we go? Who, like I said a few minutes ago, who is buying at these levels, right? You're not wrong. We're at a very, very high point. If you look at price PE ratios, price to earnings ratios, if you look at the S&P itself, the Shiller ratio, Shiller PE ratios, highest we've seen in decades, right? It's feeling very overpriced. So you're not wrong. How much higher can we go? Is it time for it to start running down? I think so. I think it is. But they've always got a trick or two up their sleeves, so we've got to stay on our toes. And again, that's the beauty of day trading, right? The beauty of day trading is that we are not married to a position. We're not married to a direction. We are light on our feet. We're able to pivot when we need to. If the market suddenly gives us a downturn, we're fine. We pivot, we move, we trade like water. We go with the flow, right? That is the key. And that's the beauty of day trading. That is absolutely my favorite thing about it is we can be light on our feet. We can pivot when we need to, and we jump ship and turn with the flow of the market. And that is a great thing. We've made money on the way up. We've made money on the way down, and we'll continue to do it that way. So, all right, coming back down here, it looks like. So again, I was feeling for a second, a little bit of a call here, but nope. There was no follow through, not yet. The other side of it, Tom Lee thinks we go much higher from here because we survived the bad news and we're now looking at earnings and the new Fed chair is in place. That last thing you said right there, the Fed chair, that can make a difference because everybody expects the guy to be dovish. Everybody expects the guy to cut rates, and the market is hooked on this free money. It's a drug, right? It's the cocaine of the market. They are hooked on this free money. And every time they lower rates or they start the quantitative easing, they are pumping more paper money into the market, and the market is eating it right up and putting it right back in. So that is the one factor there that that says, yes, we could go higher, as irrational as it seems, because of the new Fed chair and the idea that we all pretty much believe the guy's going to lower rates. He says he's going to be independent, but Trump picked him and Trump wants rates lower. So I'm going to believe that this guy is going to lower rates. I think he's going to. Kevin Warsh, that's his name. I believe he's going to come in and cut rates. And if he does that, then yeah, you're absolutely right. I think the market's going to continue to eat up this free money and push up higher. I did hear Tom Lee's prediction. I think he's predicting now 7,700 on the S&P 500, which is absolutely wild. Here's one thing I would recommend you all take a look at, and that is the Shiller PE ratio on the S&P 500. Take a look at that. That is, we are in dangerous bubble territory here. And yes, we can push up higher, but we are in dangerous bubble territory. That's what I'll say about that. All right. Hello, Dan. How are you? Not immediately. He won't lower rates, I don't think. Yeah, we'll see, David. He may skip a session or two just to prove that he's independent. But I believe he'll lower rates sooner than later. Absolutely. Especially before the we're coming into a midterm. We are in a midterm year. So yeah, I don't think it'll be long. Yeah, he may wait a meeting or so to just kind of not show his hand right away, but I'm pretty convinced he'll lower rates sooner than later. All right. He doesn't want to look like Trump is pushing him in the first go round. Yeah, exactly. Yep. All right, so still sitting here at this overnight low, not going anywhere yet. I will pivot over to puts if we push this bottom again. And I would be looking at the 710s. So if we push through and break the bottom this time, I will jump into a put. I want to see some real evidence because we broke through here and here. I want to see us really break and drop. We may or may not do that, so I'm watching. NVIDIA really dropping, down 3.5% today. The Qs are down 1.5%. So this is a negative day. There we go, breaking that bottom. I'm not in yet. I'm just watching to see if we hold this level. The MACD is rolling over. The VIX did give us a little jump. We're up to 18.7 on the VIX. We do need to take a look at options on the VIX here in a minute. We'll do that in just a minute. Holding the line so far, 709 on the SPY. We do have some volume building at the 708 puts. Still holding right here. No trade right now. I'm just sitting on my hands. I've got a good profit today. I'm not going to give it back to this range. All right. No put yet. Could we consider calls inside the range? Same as what I said before. We could. We thought about it right over in this zone right here. It was looking like it was starting to push, but it's right in the middle. See, do you see my cursor right here? Here's the top of the range. Here's the bottom of the range. Right here, it's dead center. So that's where we got to be careful. Getting a little, looks like maybe another retest of this low. It's really trying, isn't it? Really wants to break this low here. Still holding. All right. Getting the MACD curling up here. And see if we can get up through the halfway point here. While we're waiting for that to do something, I'm going to take a look. I want to show you the options flow on the VIX. This is something I've been watching. The next expiration for the VIX is Wednesday. Now remember, VIX expires in the AM. That's different. That is different than most all other options expirations. It expires in the AM. And a lot of times when we see the VIX expiring, we can also see some increased volatility on those expiration days. But if we take a look at the open interest here on the VIX. I'm going to open this up to 35 strikes. Okay, take a look at the open interest on the call side for tomorrow's expiration. Look at that. A lot of open interest all up and down, but mostly all up the call side, right? Do you see it? Open. So let's talk about open interest. Open interest is a snapshot of how many people are holding this option. That's all it is. Open interest is a static number. It gets updated overnight. So volume gets updated dynamically, happens during the day, constantly and continuously. Everybody that is opening up positions today, these 6,000 people right here that opened up this position at 20 on the VIX, 20 calls, they will be added to this 12,000 that's already sitting there. Okay. So right now, as of last night, there were 12,000 people holding these VIX 20 calls. And today we've added another 6,200 to that mix. Now, whoever closes that position, we can't see that, but we'll see that tonight based on this number, right? So if everyone still holds their position, we've got 12,000 open interest on the 20 VIX calls. The 6,200 will get added. So we'll have roughly 18,000 minus whoever closes their position today. So all of this open interest is as of last night. And if you look up the chain, look at how much we've got sitting here. 18,000 at the, what is that, 25? 14,000, 14,000. And then look over here at the open interest on the put side. What? Nothing. There's nothing there. We've got about 3,000 sitting at the 17 strike. That's about it. 3,000 sitting at the 20 strike. So basically the calls are super heavily skewed, very, very heavily skewed. Now that doesn't always mean that it's going to play out that way. It doesn't, just because we see people sitting here, it doesn't always play out that way, but a lot of times it does. And so I'm going to be watching for either. That's what I'm saying when I say the VIX is curling up to spring. It's coiling up to give us a spring. I think it's going to, right? So sometime maybe today or tomorrow, we'll see this kind of spring. I don't know. But it looks like that's where people are betting, right? They're betting that we're going to pop up to 20. And how high have we gotten? Let's look at today. Let's look at the VIX today. How high did we get today? We got at the open about 18.9, so almost 19. Let's look back at a 15-minute and see the highest we've been in the last couple of days. I think we did hit 20. We hit 19.4 pre-market. This has kind of been our little top here, this 19 area. We did hit 20 over here on, we hit 21 on the 23rd, which was 27, 26, 25, 24, 20, Thursday. It was Thursday when we had that drop. So we are maybe going to see a pop up there on the VIX. We'll see. I'm watching for that. There's a lot of people sitting here thinking that we will. So we'll see. We'll keep an eye on. But I wanted to show you that because the VIX is, let's look at the daily. The VIX is just acting to me just a little wonky. It's just a little odd. It came down. That's normal. It came down as we were pushing up. We were all pushing up in the market. VIX was dropping hard, but VIX never got down to this complacent level in this 14, 15 zone. It kind of bottomed out here on the 17th, and it sort of just went up and sideways. And that's what it's been doing since the 17th. And today it's given us a little green. So we had a little bit of green here on the 21st. We're getting a little bit of green today. So something to be aware of. It doesn't mean that we're necessarily going to have some wild crash in the market, but the VIX is looking to me like it is setting up for a spring. So just something to be aware of there, especially with earnings coming up. Okay. Let's get back to our minute chart. See what we're doing here. Just floating sideways. All right, we're getting close to the end of our stream. We didn't get to take a trade today. Bummer. But I'll tell you what my plan is for the rest of the day. I think we could pop up. I do think that could happen. So if we do move, if they start moving price up through the VWAP, I'll consider calls. I'm open to it. We've got a really high overnight high, right? I showed you that up here, way up here, still 50, 70 points over us. So will we hit it today? I don't think so, but it's a possibility. So you always have to be open to that. If it comes up and pushes up through the VWAP, I will consider calls. I don't want to take puts until we're really very clearly breaking this overnight low, which is sitting right here at 709 on the SPY. We got to break down through that pretty convincingly, not just a little peak below like we had here, look below and fail. I want to see a real break. And then I'll jump into puts. In the meantime, I am sitting on my hands as we continue on in this range. Once this range breaks, then I will jump in again. So that is it for us today. Nick's saying, have you tried calling Mr. Market Maker and asking him to do something? I could try. I don't think he's going to listen to me, but we could certainly try to have that conversation. In the meantime, we just got to be patient. And as you guys know, I like to say 90% of trading is patience, waiting and being patient. And Mr. Warren Buffett himself said that the market is a tool for taking money out of the hands of the impatient and placing it into the hands of the patient. And I couldn't agree more. So I'm just going to be patient as we navigate this range. And you guys know my market plan for today. Be aware tonight of any positions that you hold. We have, again, big catalysts in the market tomorrow. So just be aware of that and be safe, guys. Better safe than sorry. All right, Nick saying thanks again. Cash is king here. 100%. Always cash is king. All right, guys, I appreciate you. We will be back again tomorrow. Oh, getting a little bounce here. We'll be back again tomorrow at 11 a.m. Eastern with some interesting updates on FOMC, hopefully. Well, I guess we won't have FOMC before tomorrow's video, but we'll have some interesting updates for you nonetheless. And we'll see you guys tomorrow. Take care. Bye for now.